we'll go ahead and get started here. I want to make sure everyone can hear me, so if you can you just reply or a yes or something in the questions tab, just to double check the sound. Okay, great, thank you. So we'll go ahead and get started. The way that we do these Q&A sessions essentially is we just take any questions that you have and then we answer them. Give me 1 second, actually. Let me try to fix this sound a little bit. Is that any better for the sound? All right, great. So if you have any questions, you send them in via the questions tab, and then I'll get to them as fast and as soon as possible. So the first question we have is from Ron. He says he took a class from OTA, and an instructor described support and resistance as price levels that traders got trapped, and then when price comes back, they exit. Because of that, he said if price moves through a level, it's no longer a good support and resistance. So he's asking if a support or resistance level, once broken, is still a support or resistance. The answer to that is absolutely. What was once support, once it is broken, becomes resistance. And what was once resistance, once broken, becomes support. Let's see if I can find an example of that. I know one. We'll go to take a look at crude oil on a daily chart. Let me remove some of the indicators so we can see the price levels a little better. If you look here, you had some support from this dip right there. Once that ended up being broken, it then became resistance. You can see the prices came up, hit it there, hit it here, hit it here, hit it here, and kept bouncing off of it. So it was once support becomes resistance once it's broken. Same in the opposite direction. Once your resistance is broken, it goes above, it then becomes support, and the market can come down and retest it before heading higher. Does that answer your question? So absolutely, support and resistance is still valid once it's broken. It just becomes the opposite of what it once was. Next question is, what is the best strategy for scalping gold on short time frames? For scalping gold, well, there's a few different strategies you can use. One of my favorite strategies is just trading short-term divergences. Let's see if we can show you some examples of this. And if you want to know in more detail how to trade a divergence, I would encourage you to come to the divergence course. It's going to be coming up here in the next 2 months, I believe. So let's change this to a 2-minute chart. Look at gold on a 2-minute chart, and what you're doing is you are selling bearish divergences and buying bullish divergences. So you have a bearish divergence here that you would have been selling. Now granted, let me change this to 5-bar analysis period. As soon as you hit your 8 EMA, you're either going break even or you are putting in a taking partial profit. Now what a bearish divergence is when you have higher prices but a lower high on your indicator. So for example here we had higher prices but a lower high on the indicator there compared to this high. And then again here, higher prices, lower high on the indicator compared to the previous high, so you're going short it significantly overvalued there as well. You can go back and these divergences occur all the time. For example, you would have been a buyer here, where you came down lower prices and a higher low indicator compared to the previous low. Had a bearish divergence up here at the top, equally high prices, lower high indicator compared to the previous high. Bullish divergence back here, lower prices compared to this previous low right here. So this is your first low, this is your second low. You can see the second low, the histogram on your momentum and your indicator line higher than the previous low, so you go long there. And these happen all the time. You can trade these in crude too. This is one of my favorite ways to trade crude, bullish and bearish divergences throughout the day. You can also trade them on tick charts if you would rather use a tick chart. For example, let's pull up a 250 tick chart and see if we can find any divergences there. You had a bearish divergence right over here where you came up, broke the previous high, moderately overvalued, lower high indicator, lower high histogram, then it rolled over. And again, these happen all the time. You just got to be watching for them. That same one up here, a bullish divergence for going long. And even here, this gave you from 1601 all the way up to a high where you had a bearish divergence of 1604. So you took about $300 a contract out of that to the upside. So that worked out very well. So the best way, in my opinion, is to trade the bullish and bearish divergences on very short time frames. If you were in the candlestick reversal course and you understand how to trade the reversals, you can trade reversals on 5-minute chart. A lot of times you get pretty good reversals like this one here for an upside reversal. This one over here for a downside reversal. This one over here for a downside reversal. You can trade 5-minute reversal patterns all day long and scalp that way as well. They happen all the time, and a lot of times you can get some very nice trades. I mean, you had short reversal patterns there, you had a short pattern there, up here. All those would have had you short, and you're taking out a couple dollars an ounce every time. So not bad for scalping. So again, the two strategies that I would personally use for scalping gold and that I use for scalping basically any market is bullish and bearish divergences on short time frames or on tick charts, and candlestick reversals. They both work extremely well in my opinion. Is it possible to set up the scanner in Tradestation to find the value chart overbought, oversold? Absolutely. If you have purchased value charts, then you have the value chart scanner. Let me pull up the shortcut bar. We will do a new scanner, and I'll show you how to set that up. You'll load it. Once you have it loaded, you're going to format it. You're going to change your criteria, so you got to expand this. You're going to change your analysis period, just like you would on your value chart. Typically, I use a 5-bar unless it's a very choppy market. Then I'll use an 11 or 14-bar analysis period. You change the interval on your scanner, ranging anywhere from 160, daily, weekly, monthly, etc. You're going to make sure you have load additional data. Then you're going to do V-close because you want to know what the last price is, whether that's over or undervalued. You're going to do greater than or equal to 4, so that's greater than or equal to moderately overvalued. And then you would go to click OK, run it just like you would any other scanner. So again, that's just a value chart scanner. You load it into the scanner in your Tradestation, and it'll run there. If you've purchased value charts, then you have, if you purchase any of the bundles, you'll have that capability. Can we determine how strong a support or resistance level is before it's tested? Really the only way you can do that, and the only way I would even think that's possible, is by looking at time frame. The longer the time frame, the better the support or resistance, and the larger the bounce, the better the support or resistance. So if you look at a weekly chart, let me condense this a little. You see right here, right at those highs, that's going to be very strong resistance, because every time it has bounced off of there, it's run quite a bit, almost $200 an ounce. So watch for how big of a bounce that price level causes when the market hits it. Same for the bottom. Either there or right there, you're going to have pretty good support. This is gold on a weekly. This is where we actually bounced off of here the other week, just a little while ago. The more points that have bounced off of it, the better, and the further it has bounced, when it bounces, the better. So if you get a point that's very strong like this, it hits it and then rallies $200 an ounce over the next couple of weeks, that's a very strong support or resistance level. So again, longer time frames are better support or resistance. The longer the time frame, the stronger the support or resistance. And the further that it repels the market, the better. How many times can the level be broken and still be a good support or resistance? Well, there's not really a set number of times that it can be broken. What I would say is if it's getting broken a lot of times, then it's probably not support or resistance. If the market just is constantly running through it, then it's not going to be a support or resistance level. If the market bounces off of it, then it is. So it's kind of like catch-22. If you are trying to trade it as a support or resistance and the market just keeps breaking through it, then obviously it's not support or resistance and you shouldn't be trading it that way. You like using MQ regression and compression indicators for swing trades of a couple days to a couple weeks. What other indicators would you suggest? Trend index or what? Well, the trend indicators can help a lot if you're doing trend following for swing trades. For example, let's pull up the daily insert analysis technique. If you pull up the MQ trend, you can see this would have had you short gold in a downtrend all the way since the 1736 price level, and it would still have you looking to be short gold. So this helps you catch very big moves, especially if you're doing swing trading or position trading. It keeps you in the position a lot longer. The red dots on the top mean it's a downtrend, green dots underneath mean it's an uptrend. So you can do that. The regression line, as you mentioned, is also very good for that. They do measure different things, but if you pull up the MQ regression and you put a longer analysis period on there, say a 100-bar analysis period, that would have had you short from all the way back here. It switched over, so you would have been in a bearish or downtrending market ever since 1735 as well. Came in a little bit later than the other one, and that would still have you short in gold. So you could also do that on a 240-minute or 120-minute time frame. I'm going to change this to a 120. So you can see that's a little bit more reactive, better for swing trading. This would be more for trend following or position trading. But if you're doing a swing trade and you have a 120, you can see this would have had you long gold from 2 days ago in an uptrend. Same with the trend index. That switched over on Monday, I believe is what that was, and had that in an uptrend, which means you'd be looking to be going long here. Next question is divergence. Price is diverging from. When I'm looking at the divergences, I'm using the divergence with MQ momentum. So I'm using the MQ momentum indicator. It's a simple indicator that Mark developed that helps you judge the momentum of a market. And I'm looking at the histogram bars and the indicator line. So you're looking at both of those. For example, here when you came down lower, you had a higher low on your indicator line as well as a higher low on your histogram compared to that previous low. So that gives you the buy signal there. So you're looking for a divergence of price and momentum. Where do you find the value chart scanner? You have to load a scanner and then insert analysis technique, and it'll say value charts are scanner. Daily chart on Q-Core. Quest Core Pharmaceuticals. I have delayed data for Questcore. Give me 1 second. Why does it continue to have overvalued prices? You got to remember, just because it's overvalued doesn't mean you're supposed to be shorting it. The trend is up, your regression line's up, your trend index is up. I'm pretty sure your momentum's going to be up as well. In an uptrending market, you want to see overvalued prices because that means it has strength to the upside. Just like in a downtrending market, you want to see undervalued prices. What you're looking for in an uptrending market is the undervalued points to get long. So again, in an uptrending market, you want to see overvalued. In a downtrending market, you want to see undervalued because it means it has strength in that direction. So value charts aren't designed to be a standalone indicator. They're designed to be used within a context, meaning you have to look at the overall direction of the market and understand which way it's headed and then trade in that direction using value to enter. You're not supposed to just be arbitrarily buying or selling value levels. Is this Q&A being recorded? Yes, it is. Pat, send an email to support@microquant.com and they'll help you get that. What is a good gold target? Chris, are you saying what's a good gold target for longs or for shorts? Longer term, shorter term? What? Okay, so if you're long gold off the support on the weekly, I would be looking for gold to potentially retest the weekly highs up around 1800. Now that's going to be extremely long term. Could take several months to get there. So you can trade it intraday up and down that way, but I would be looking for a very long-term goal of a potential channel high retest. You're going to have a bit of resistance in gold right there, and that's going to be coming from these lows, those weekly lows, and these weekly highs back here. You can see it's bounced the market off of it several times. So be aware of that. That's going to be at about 1628. So if you wanted a shorter term profit target, 1628 could be it before we get a bounce. But we already had a pretty large sell-off today or consolidation period. I would expect gold to continue to head higher though. Eventually I'm bullish gold until it gets up around 1800. But again, that's extremely long term. What number do I have the scaling set to on gold? Are you talking about my analysis period for value charts, Elizabeth? My analysis period is set to 5 for value charts. Honestly, with gold right here, how it's pretty choppy like this, you probably want to use a longer time frame or a longer analysis period. Now, value charts can be used with a setting anywhere from 5 to 50. I typically use a 5 because that's much more reactive, but if you change this out to maybe a 14 or even a 21 bar analysis period, it'll do a much better job, you can see, of identifying these lows and highs on the weekly. So in choppy periods like this, you can use longer analysis periods. And actually, there's a great example of when you want to use a longer analysis period. We just did a video on it today. If you pull up cotton and you look on the daily right here, let's pull up a 240-minute chart. Pull up a 240-minute chart of cotton. Oops. Let me get rid of some of these extra indicators so we can actually see what I'm talking about. You can see how cotton's been basically range bound for a while now, for the past few weeks. And you see when I'm using this 5-bar analysis period, it's not doing as good of a job as it could be of identifying the highs and the lows of this market. You can see how the market's really choppy, moving from the top to the bottom, and it takes about 10 to 15 bars to get from the bottom to the top for these price swings. This is a perfect time to use a longer analysis period with your value charts. So you just format your analysis technique. Right now I have it set to 5. We change that out to maybe a 21, so a much longer time frame. You can see how much better of a job it does by identifying the highs and the lows with over and undervalued prices. So you just got to keep in mind the context of the market, what the price swings are doing, how big of price swings you're getting. Also watch this for cotton. You're going to hit a trend line coming down here. Maybe we'll hit it tomorrow. That's at about 15 or 85.10. So watch for that to potentially bounce prices. Let's see if that counts on the bottom as well. Not as well. So again, longer analysis period for more choppy time frames. Sorry about that. Went off on a rabbit trail. Just thinking to myself. Longer time frames and more choppy periods, you can use a longer analysis period. What are my favorite markets and best, most profitable trading strategies in day trading? They're going to be the exact same ones that I use for scalping, which is divergences and candlestick reversals. Candlestick reversals are great. I'll show you a perfect example of a great candlestick reversal we had today. We actually pointed it out right at the close of the live trading room, right here in natural gas. A great red hat doji. It reversed and fell all the way down. So I really enjoy trading reversals, trade them, and I trade divergences all the time in the trading room. Probably my most profitable ways of trading. My favorite markets are crude oil, gold, soy, and euro, basically. Those are my favorites to trade. You get a lot of really good signals there. If you're in the trading room, you see all the different markets that we trade and the different ways that we trade them. We follow about 40 different futures markets in the futures live trading room, and we just trade the strategies as they come up. I mean, if we see a good signal, we'll take the trade no matter what market it's in, most of the time. Occasionally I'll stay out of it if it's heating oil or RBOB or coffee. A lot of times I stay out of those because they're more thinly traded markets. But typically we just look for specific patterns. Once we get those patterns, then we trade them. Try default 14 for cotton, 240 minute. Okay, 1 second. It does a pretty good job. I mean, it pulls up the significantly overvalued bottom here, overvalued top there, and it's calling you significantly overvalued there and up there. So that does a pretty good job as well. 14-bar analysis period does. Again, it's really up to you and how you want to trade it. I typically stick with the 5 because that gives you a lot more actionable signals. If you wanted to be a little bit more aggressive or conservative or not trying to get as many signals, you just wanted better signals, then you could look for longer time frame. It's really up to you and your trading style though. Instead of changing analysis period, would it be better for a different time frame? Not sure what you mean, Jim. Can we get an audio alert on red hat dojis? No, we don't have a way of doing an audio alert for candlestick reversals. What we do have, and what we're trying to have up in the next, by the end of this week, is the signal feed subscription where you can subscribe to signal feed and it'll pop up right on your desktop whenever there's a potential reversal, and then you can go in and look at it and decide whether or not it's a good signal. What did we trade in the room today and how did we do? We did pretty well. We were up again today. Gave back, we were up around $1,500 one point, gave back a lot of the gains, ended up closing the day up about 600. We had, let's see, we had longs in copper, which heck, if you're still holding on to that, you're up quite a bit because we were long all the way down from these lows. We had longs in, and here was why we were long copper, by the way. If you look at copper on the 240-minute chart, that's actually turned out to be a great trade. And you draw your trend line, come down across the top. We were testing that trend line. We tested it again and then took off. So you're now up around $1,500 a contract more than likely if you're still holding in onto those longs. Let's see, what else did we trade? We traded soy. We had shorts and longs in soy. They both worked out pretty well. I changed this to a 30-minute chart. Forgive me if I forget some of the trades that we took. But we had shorts at the high here, and then longs at the low, back up. We also had shorts in coffee. Right up here, we had one short here, and then another short there. That was based off of bearish divergences, like I was just explaining to you, where you have equally high or higher prices. A lower high indicator, we took a short there. We covered in significantly undervalued. And then we talked about shorting again up here. I don't know if anybody actually took that short. That ended up being a good short as well. That was about 500 a contract. We traded heating oil up and down all over the place. One of the best trades in heating oil. Let me change this to maybe a 5-minute chart. And go back. Oh wow, let's change that to a 15-minute chart. We had a trend line here in heating oil that we were trading off of. Coming up and across like that. We went long here, covered there. It broke. We tried going long on the retest here. We got stopped out because we weren't risking very much. We went long here, covered at the top, and then talked about shorting on the retest of that trend line. And if you took the short, then you ended up getting about $1,500 a contract to the downside. We also had a long here off of a 2-minute bullish divergence. That worked out pretty well as well. That was up $400 or $500 a contract there. We also traded natural gas. Like I said, right at the end of the trading room, we shorted natural gas right as we were closing, and that was on the open of that bar because the trading room closes at 12, which is when that bar completed. We said that looks like a reversal pattern, and it ended up reversing very nicely. That's just some of the trades that we had. We had a lot more than that. However, those are some of the main ones. We had shorts in treasury bonds off of reversal patterns. We tried shorting the stock market as well. Ended up getting stopped out a few times, which was fine. Like I kept saying, you don't want to give up your gains for the day and make a winning day turn into a losing day. Those are some of the trades that we had in the trading room today. Elizabeth, I cannot answer that question. I am sorry. We can't give specific advice for anyone's trading. Could I explain the signal feed services coming out that's going to be talking about the extreme value? Yeah, the way that's going to work is it's going to identify a trending market. For example, look at gold. We'll look at gold on a longer time frame on 240-minute chart. So it will identify this market trending down. Let's insert an analysis technique. Inky regression, that looks good. So it'll say, okay, gold is trending down. So what it's going to do is call out overvalued price points, such as these, and saying that's a potential short because the market is trending down. So it helps you identify these price points. And that's going to be on 30-minute, 60-minute, 120, 240, and daily charts for about 40 different futures markets, about 50 different equities, and all the currency pairs. So it's just going to call out the trend and overvalued extreme value levels against the trend to help you identify strategic entry points into trending markets. All right, don't fight the Fed. Absolutely. If there's no more questions, anyone else have any questions? And then we can go back. I'll answer them, and then we can continue on or end the webinar if there's no more. Do I have a list of equity stocks that will be trading on Signal Feed? I don't have a list with me right now. Send me an email, Elizabeth, and I'll get you one. I will get you a list. Absolutely. Pricing. We're still working on the pricing, Scott. I'll let you know in the trading room or when we announce that they're up. Will it be one price for both, for the candlestick reversal and the extreme value? No. They're going to be two different subscription options. So it'll be up to you if you want to trade it and how you want to trade it, and which ones you want to subscribe to and which ones you don't. All right, it looks like there's not very many more questions. So we're going to go ahead and end tonight's webinar. One last call. If you have any questions, let me know. Give you about 2 minutes to send it in. If not, we'll go ahead and conclude the webinar. I look forward to seeing most of you in the live trading room tomorrow. Well, many of you. Maybe not most of you. Hope I answered your question. If you did not have your question answered, send an email to feedback@microquant.com and we'll get it in and make sure it's answered during the next Q&A session. Again, that's feedback@microquant.com if you want to make sure your question gets answered during the next Q&A. So thanks everybody for coming. That's going to conclude today's webinar as no one else has any questions. Again, look forward to seeing most of you in the trading room tomorrow. Hope everybody has a great night.